Hello! In today's video, you and I will be taking a look at the latest housing market data and what experts predict for the housing market in 2024. So, without further ado, let's get into it. Let's be honest, 2023 was a rather tumultuous year for the property market. It was packed with price swings, government bills being proposed and then dropped, and interest rates rising to their highest level in decades. But after it was all said and done, the UK housing market ended 2023 down 1.8%. 4.5% below the peak that was reached in the summer of 2022. The only exceptions were Northern Ireland and Scotland seeing a modest rise. The weakest performing region in the UK was in fact East Anglia, seeing a 5.2% decline in prices. To really drive home just how crazy the property market is at the moment, even with lower prices, the deposit paid by a first-time buyer would be 105% of their typical take-home pay. There's some consolation though, because this is actually down from 116% that we saw in 2022. However, it is still worryingly close to the pre-financial crisis level of 108%. It gets even worse. The typical monthly payment would be 38% of the take-home pay, well above the long-run average of 30%. So although there's been a modest drop in prices, why haven't we seen a big crash? Real quick, if you are finding this video useful, I would really appreciate if you could give the video a like, share this video with anyone you think might benefit from it, and of course subscribe to the channel. Also, let me know in the comments down below what you think of the current situation in the property market. Back to the video. Now, there is one major reason, in my opinion, why we have yet to see a major property market crash: housing supply. Now, this is nothing new. Supply and demand in the property market has been an issue for years, with demand far outstripping supply for decades. The disruption caused by the pandemic has exacerbated the issue, with record high price rises following the COVID restrictions. The ex-Chancellor, now PM Rishi Sunak, introduced a stamp duty holiday to support the property market, which was hit by lockdowns in 2020. This holiday obviously stimulated demand, with buyers quite literally racing to complete before the stamp duty holiday ended. This ended up being a major contributing factor to what is now the widest gap between supply and demand since 2013. A further stamp duty cut was then introduced by Liz Truss in September of 2022. This was before Jeremy Hunt came out and said that the cut will end in 2025. There is also a serious argument that governments have failed for years to deal with the housing crisis in the UK because of the view that the public, who are majority homeowners, would be against policies that actually restrict house price growth. Now, this view actually goes against a YouGov poll ran by Positive Money. In their poll, they found that 54% of British homeowners would actually be in favour of policies that would see their house price stay stagnant if it meant that prices were more affordable for everyone. This raises the question, is that actually true? Personally, I think it's unlikely. If push came to shove, would people really be happy with the government introducing policies that would essentially have a negative impact on the house price growth of their properties? I don't think so. You see, it's easy in a poll to paint yourself in a favourable light by giving an answer that you think would do that. However, to actually back a government initiative that would stop house prices from rising is a completely different beast. People's idea and feeling towards how well they are doing is directly linked to the valuation or performance of their property. The more house prices increase, the richer people feel. The main reason being is that for 99% of people, their home is their largest asset. And yes, a home is an asset. I am yet to see a convincing argument that a personal residence is not an asset. If you think you have one, let me know in the comments down below, because out of all the videos I've watched and all the things that I've read from people who suggest that it's not an asset, I've not been convinced yet. Now, moving on to what to expect from 2024. There's little sign that the cost of living crisis is going away anytime soon. It's unlikely that interest rates will rise anymore. However, at these elevated levels, house prices are likely to stagnate or continue on a downward trend. That being said, if the property market does continue on a downward trend, that doesn't necessarily mean that it's good for the people who are trying to get on the housing ladder. Elevated interest rates mean the significant increase in monthly mortgage payments that we have already seen deter people from buying property will likely continue. Plus, you have the issue of incomes being completely decimated by the cost of living crisis. I also have a theory. Hold on tight. I believe there is a growing community of young people who are beginning to believe that buying a home is just unachievable, and is unachievable even into the future, unless they start making significant amounts of money. If my theory is correct, this is a major issue for two reasons. It's very much a defeatist attitude. Once in your head you accept an outcome as being unachievable, you've already lost. You can't achieve a goal if you don't believe a goal is achievable. You need to believe you can do it to enable you to put a plan in place and take the necessary steps to achieve that goal. That's not me minimizing just how difficult it is to buy property for young people or anyone trying to get on the housing line for the first time, whether you're young or old. It's incredibly difficult, especially, the way that incomes versus property prices are. But it's not impossible. And there are actions and steps that you have to take if you want to be able to afford a home, if you really want to be able to buy a home. The people who have already admitted defeat and are choosing not to believe that they can buy a house are spending their money elsewhere instead of saving for a house. And more often than not, the money that they are spending is on things that depreciate in value, putting them in an even worse position to ever afford a home. All we have to really do to kind of see this is look at the massive rise in consumer debt. Now, research shows that 25% of households owe at least £5,000 across various consumer credit facilities. 35% of households owe money on at least one credit card. 7% of all households have borrowed money from friends or family. The average monthly car payment is between £300 and £400 a month. In 2009, less than half of all private new car buyers used car dealer financing. By 2018, it was more than 90%. Currently, that number sits at 84%. Finally, according to TSB, 51% of 18 to 24-year-olds have taken out new or additional credit in the last 12 months, or they expect to in the next 12 months. Now, there are a multitude of reasons for this debt, mainly the cost of living crisis. But if I'm right, and people are beginning to accept the fact that they cannot afford to buy a home, you will be spending that money elsewhere. Which overall is a really sad thing for the UK, as property ownership is one of the best things that you can do to build wealth. With all that being said, if you found this video useful, remember, hit that like button, share this video, leave me a comment, and of course, subscribe to the channel. Until next time,